strategies. Okay, I think mainly just two. Yeah, I think it's just two strategies that we've looked over the past couple of weeks, and there's been a lot of interest, obviously, from most people's end regarding the Nasdaq, and I think I've expressed my only concern that I have with people trading the Nasdaq with relatively low funded accounts, as with the Signal Group. When you're trading with the in the Signal Group, okay, you can start off very small, $100, but you're only going to be trading currencies. And once you grow your account from $100 to at least 500 US dollars, that would be sufficient for you then to start trading the Nasdaq. Because obviously your stop losses are either going to be too tight, right, or you're just going to hurt your account if you just trade the Nasdaq with a very small trading account, right? So you want to be able to take one or two losses should they occur, right? Because it's not like you're gonna win every single trade that you take. And if you go in with that type of with that mentality, the markets will definitely disappoint you. So I mean, even now I didn't call this buy trade on the Nasdaq because my buy was just above 9,500, which is boom somewhere around here. Right, so it was just somewhere around here. I think somewhere around 9,500 because 9,500 is here. This swing low point over here. And yeah, I still do believe that we have a bit of upside momentum when it comes to the NASDAQ in the short term. Right, even long term, I'm still long NASDAQ. Okay, so with that being said, obviously the guys will then go on to do the analysis and check out the or do understand the strategies that we'll be using. We'll spot this quite easily about why we'd be looking to buy or we would have bought at around 9,500 on the Nasdaq. Okay, now one thing that we haven't really spoken about is swing and position trading. Okay, now when it comes to swing trading, a swing trader is essentially someone who takes trades from more than one day, right? Because remember, 24 hours you're a scalper, and as a swing trade will be anything more than 24 months, rather 24 weeks, okay, to about 2 or 3 weeks. Okay, so 24, more than 24 hours, so more than one day. So if you hold a trade for 2 days, that's basically a scalp to about 2 or 3 weeks. Okay, so it could be 2 days, anything in between that 2 or 3 week period is basically a swing trade. And a position trade would be anything from about 3 weeks to, I don't know, 10 years or 15 years or 20 years. That would be a position trade. So with position trading, obviously the time frames you're going to be using will differ as opposed to the time frames you use when you're scalping and looking for short-term trading opportunities, because your objective is different as well as your time horizon is different. Your objective as a short-term trader is to make small, tiny profits consistently, and have a very high win ratio. And as a position long-term trader, you're looking at most of the time you're probably going to be wrong. You could be right only 40% of the time, but when you trade, you're risking, let's say, $100 to make 1,500 US dollars, right? You're risking $100 to make $2,000. Now these are just numbers, right? So the reward is much greater than the risk, and therefore, I mean, you don't need to be right a whole lot, okay? But if you're scalping, making 10 pips here and then 10 pips loss when you lose, then that means you need to be right most of the time in order for you to be profitable. Okay, so let's move on to the higher time frames, right? So let's get out those for this 1 hour time frames and just look at the 4 hour and the daily. Now, when it comes to how we'll be trading as a swing trader or as a position trader, will basically be, I can say, determined more by the strategy, right? So if you've gone through the strategy ebook, which I suggest you do, let's say we're going with the very first strategy, right? So when it comes to strategy one, there's a few key things that we'll be looking at for us to enter a trade, right? So for one, let's just use the Fibonacci retracement tool. So we're looking for the Fibonacci retracement, and let's use this as our swing low point, and there is our swing high. Okay, so if you go through the strategy ebook, which I suggest you do, let's say we're going with the very first strategy, right? So when it comes to strategy one, there's a few key things that we'll be looking at for us to enter a trade, right? So for one, let's just use the Fibonacci retracement tool. So we're looking for the Fibonacci retracement, and let's use this as our swing low point, and there is our swing high. Okay, If you notice how my Fibonacci basically looks, we are only looking at 50 and 62%. Right? Okay, let me just do this again. I think I'm using a different MT4 platform, but all the other levels are extinct on my Fibonacci. Right, let's just get rid of these. Okay. All right, so it seems like I didn't get rid of them. Let me just do that one more time. Let's try to do that one more time. Okay, yeah. Place. Right, boom. So we have that 50 to 62% Fibonacci retracement. Right. I usually just round it off to 62% because I just think it's too much energy to say 61.8. So that 62% Fibonacci retracement is the one that we specifically look for in terms of pullbacks, because the market, as the old adage says, or the old market saying says, the market moves 2 steps forward and 1 step backwards. Right. So with that in mind, if it moves 100 pips to the upside, we'd like to see it pull back at least 50 pips in order for us to buy back again. This is simply because the major players who are involved, obviously, in the larger, I can say, trades, will always look for a cheaper price. It's sort of like if you want to buy a laptop, right? So if you want to buy the piece, your laptop at 1,000 rand. Okay, so let's just say you buy a laptop at 1,000 rand, and the value of the laptop is 4,000 rand. Okay, and it goes up to 4,000 rand, and you feel like, okay, I still want to buy more of these laptops because I sold quite a lot of these, right? So let's just say you want to sell them, but you don't want to buy it at 4,000, right? You'd much rather buy it when it drops down to $1,000 or to $2,000, even if you do have the funds to buy them at $4,000 and throw in a markup. You'd much rather buy it at a much cheaper price. Okay, so that is the way, or that is a frame of thinking that you need to get around, because at the end of the day, when it comes to how the markets move, they're mostly determined by human emotion, nothing else, nothing. Okay. So when we see this pullback, right, when we see the pullback from, let's say this 100 pip, let's just assume that this was a 100-point rise, and we see a pullback about 50 pips, we're seeing profit taking, right? So we're seeing profit taking from larger institutions, your larger investors. So we're looking at all these different participants taking profits, and hence the market just temporarily pulls back either into, let's say, this area, this 50 to 62% area over here, right? Or it just extends sometimes by a few pips from this 62% area. Okay. So let me just place it exactly on there. Not that it's going to make any difference. But yeah. Okay. Now, when we look at this, right, it's pretty easy to see. We're like, okay, yeah, we're looking at a potential rise on the NASDAQ, right, because it takes that 2 step forward and then pulls back 1 step, and that actually makes sense, right? So we want to belong on the NASDAQ. And the neat thing about the Fibonacci is that you can also still use it as a way to actually get out of trade, which we'll cover a bit more in another session. But we can use the Fibonacci as well to get out of a position. Okay, so as a way to take profit, and also we can use it as a way to enter into a trade, right? Okay, so that would be one element. So that would be one part of how the strategy works, and that would be very easy to see. Okay, now a lot of guys will have some issues trading the Fibonacci because sometimes you're not quite sure where to place it. Okay, now I think what you can do, if that is one of the issues that you're currently having. Okay, I'm not quite sure what's indicated. It's a volume. It should be in trends. It should be somewhere here. Okay, let me just go grab it in custom then. Just didn't want to go through this whole. Right, boom. Okay, the zigzag. So I'm not sure if you guys are familiar with the zigzag, but it just basically helps you to see swing highs and swing lows, because you can actually see the turning points at I could say 93.69. See another turning point just below 91.92. Another turning point just above 96.64. All right. So then we place, you can see where we placed our Fibonacci was here, right, and dragged it down to this low over here. And that's exactly where the Fibonacci is supposed to go according to the zigzag, right? So you can take it at that point, or you can just sort of like, argue with the zigzag and throw it over here. But this is more for the guys who are actually struggling and not quite certain where they're supposed to be placing that Fibonacci retracement tool. Because yeah, I do believe that it can be a bit tricky at times. Okay, about where you should place. So if you go back, you'll see, right, there was a swing high, there was a swing low, there's another swing high, swing high, swing low, swing high as well. Okay, so you can see the swing high point as well here. Sorry about the guys, and there's another swing low and swing high. So all you need to do is to place your Fibonacci retracement tool at this swing low, boom, up to that swing high. And if we just get rid of this distraction over here, you can see we had a touch on that 50 to 62% before price started to push to the upside. All right, it did extend lower a bit, but it makes things much easier to see about where you should be placing that Fibonacci retracement tool. Right? Is this making sense, guys? That's making sense. Just type Y, yes. If you have any questions that are actually relevant to what we're doing right now, please throw them in the chat right now, because yeah. All right, so if yeah, I think for the guys who are not quite certain where to get the zigzag tool, just insert and then custom indicators, right? Let me just custom, right, and then you just go down to the bottom, right? So it should be somewhere over here. Okay, it's just that I haven't used this MT4 platform in a while, so I just assume it should be on trend. I'm not sure why, but there's supposed to be something over here. Okay. Okay, so what you need to do then from today, if you're struggling with placing the Fibonacci tool, because it's just one element of the strategy. So when you're looking at strategy one in the ebook, you'll be able to see how we use the Fibonacci. Right? It's exactly how I explained it, but I feel like this is more, this is a simpler way of actually doing it, because a lot of guys, it does seem like they are struggling with placing the Fibonacci. And this, to me, seems like a very simple way. Right. You just look at where that swing high is, right? There's a swing low, and you place swing high there, and then you place a swing low there. Okay. You can see in this example, it just touched the 50% retracement, and then the market just pushed off right to the upside. So that makes sense there. And there's countless examples we can actually look at when the market just runs in through to that 50% Fibonacci retracement area over here, right? That trading zone, and that is the only zone that we look at, right? I've had a lot of questions regarding the 38, 23%, and those really mean nothing to me personally, right? I don't mean that you should also have that sort of approach to the market, but they basically mean nothing to me, okay? Because I'm only looking for one key area. So if I get a trading opportunity that's in line with that trading zone, then I take the trade. Otherwise, I'm not involved. Okay. So as I've said before, one of the major advantages of trading using the retracement tool is that most of the time you're going to be trading in line with the trend, right? You can see without me doing much, right? just by looking at the swing low and then swing high, placing the swing low through to the swing high, getting our 50% retracement. Okay, getting our 50% retracement. Okay, and we are trading in line with the major trend, so that's the uptrend. Okay, so if we place it properly, if we're using it properly, then most of the time, then we are trading in line with what with where the major directional biases or the market sentiment basically. So it's pretty useful in that regard as well. And I think I've already mentioned that when you're using the Fibonacci, your get out point should be very simple, right? I mean, when it comes to trading rules, the simpler it is, the much easier it is to actually follow, right? The more complex your trading system is, or your strategy, or your rules, trading plan, whatever it is, the more complex things get, right, the more difficult it is to actually execute. So you don't want to have that frame of mind when you're taking trades where you have to go through a whole laundry list of trading rules and I can say just extra baggage, right? You just want to cut straight to the chase and make sure that you have every single thing that's needed for the trading entry to be possible, to be available, right? So let's say 3 rules, right? You want to see the market bounce on the 50% moving average, or rather on the 50 moving average. You want to see the market retrace 50% from swing low to swing high, and you want to see, I don't know, parabolic SAR. I'm just making stuff up with the parabolic SAR especially. Fire up, then that's when you buy, right? Those rules are pretty straightforward. That's something you can actually test. But now, if you start including a lot of rules and say, all right, I'm going to be using the trend line, and then I'm going to use the RSI, and I'm going to use the TDI, and I'm going to use the stochastic, and let's say I also want to include price in it, and just by using big figures and all that sort of stuff, then you're starting to confuse yourself. So just rather keep it simple, right? The only levels that I care about is the 50 and the 62% for that particular reason, right? It might bounce on the 23% and it might head in the direction that I thought it would, but it doesn't make any difference to me, right? There's more trading opportunities coming. It's not like that was the only trading opportunity. I want ones that are within those boundaries or those rules that I set. Okay. All right, guys. Any questions? Any questions? Okay. All right, guys. I don't see any questions today. I'm not quite sure if that's a good thing or a bad thing. I'm not sure if it's a good thing or a bad thing.